All right, guys, so the crypto crash is already well underway. This past week, I liquidated most of my crypto holdings, and I think you guys should be doing the same thing. So long story short, a lot of people made a lot of money in 2021 in crypto. Prices went way up, and they generated a lot of taxable gains. And in order to pay those taxable gains, which is going to be due in about 3 months from now, they're going to be liquidating a lot of their crypto holdings and giving that money to the IRS. So basically, a bunch of money entered the crypto market in the past year, and now in the next 3 months, a bunch of money is going to be leaving the crypto market to meet tax obligations. So to see why I think this, let's rewind the clock back to 2017 when Ethereum had its first big bull run. So in 2017, Ethereum started at around $10, and then it peaked at around $1,000 by the end of the year. And then it peaked in January at around $1,200. Then it had a 33% dip down to around $800 in February, followed by another 50% dip in March down to around $400. And notice when it bottomed out, it bottomed out right in the middle of April. So in the United States, April 15th is the tax day. So right after April 15th, Ethereum prices rocketed back up again to around $800. So if you had a crystal ball back in 2017 and 2018, the best way to play this market would have been to sell in January and then buy back at the bottom in April. And basically, I think that story is going to repeat itself again this year for the exact same reasons. So the reason why this happens is because right now, crypto prices are being driven by a lot of inexperienced first-time traders, right? This is their first time really investing their own money, and they're not thinking ahead about the tax obligations that they're going to have to make next year when they're making investments or anything like that. Remember, about 2 years ago, the general public started getting involved in stocks for the first time, right? They installed apps like Robinhood, and then they started buying, whatever sounded cool, like Tesla, and then they saw some memes like AMC and GameStop, and they started buying those. And then they might have heard from some YouTube influencer that they should be buying crypto, or they had some friend who made a lot of money in crypto and they wanted to try to repeat that same gain. And so they just started buying random things they thought were cool, like Dogecoin or Shiba Inu or Cardano or whatever. That's what's been driving a lot of these crypto markets and a lot of these meme stocks in the past year. And you can see this same effect last year. If you look at a lot of the popular meme stocks from 2021, NEO, for example, I remember seeing videos on TikTok telling me to buy NEO. So NEO started off 2021, it peaked at around the middle of February, and then it sold off pretty sharply and bottomed out right in the middle of May. So if you remember last year, May 17th was the tax day because it got pushed back a month due to COVID. So, and you can see the same chart again in Plug Power over here. Peaked in the middle of February, dropped, bottomed out right before tax day, right in the middle of May. So you see that same pattern repeating itself in different areas. Whereas if you look at other mainstream stocks like Google, for example, you won't see that artifact in the middle of May. Now let's look at Ethereum's price chart from this year. So it looks like Ethereum peaked in the middle of November at around like $4,700, and then it had its 33% drop off to around $3,100. So that's the first leg of the drop off, and it happened a little earlier than I would have expected. And I think that's because the experienced traders, they know what's going on. Everything I'm telling you right now, they have already thought of it. They already know it, and they're trying to get out ahead of it, right? If you think there's going to be a 33% dip in January, they're just going to be safe and sell in November and December, right? So they've already sold their first part. And so I'm predicting that there's going to be another 50% drop in the crypto market in the next 2 or 3 months. So because so many people are predicting this crash, I think that instead of bottoming out in the middle of April, it's probably going to bottom out earlier in the middle of March, just like it peaked about a month early over here. So if you guys have been sitting on the sidelines and waiting to buy crypto, I would say don't buy it right now. I would wait until a middle of March, maybe early April at the latest, and then I would start buying in. That's my current plan. I sold most of my crypto holdings already, and I'm going to be buying in March and April. So for the next 2 months, you might run into another few false rallies. So for example, back in 2017 Ethereum, you see that like it dropped from its peak and then it pounced back up for a sec. Or here it dumped and then pumped up again. Those are people like buying the dip. So if you see those rallies, you should be selling into those if you haven't sold already instead of buying into them. Just switch to stable coins and wait patiently for the market to bottom out. So I'm going to show you how I'm protecting my gains right now. So in Avalanche Network, for example, I sold all my AVAX and I switched it to USDC, and then I put it all in the stablecoin pairs. So right here we have a USDC to USDC stablecoin pair. So this is USDC from the Ethereum blockchain that has been wrapped and put onto the Avalanche blockchain, whereas this is USDC that is native, issued by the organization Circle on the Avalanche blockchain. So it's really awesome to see Circle supporting Avalanche officially now. That's really bullish for Avalanche. And another thing that I did on Avalanche is I took a bunch of USDC and I deposited it in Trader Joe's borrowing and lending platform. So when you deposit money into Trader Joe's borrowing and lending platform, you get to earn some APY right here. Looks like I'm earning like 6.5% APY. And then in addition, I get some Trader Joe rewards, which is Trader Joe's own little token that they use to incentivize you to use their platform. So I'll be making some money from that. And then I took that actually a step further. So I deposited USDC as collateral, and then I borrowed against it. I borrowed AVAX against that, sold the AVAX into USDC, and then put the USDC back into the borrowing platform. So I'm actually shorting AVAX right now. I owe about $500 in AVAX. So for these borrowing and lending platforms, what you want to do is, if you think the price of something is going to go down, you want to borrow that. If you think the price of something is going to go up or stay the same, you want to loan that out. So USDC, it's a stable coin. It's going to stay the same price. I don't have to worry about that. So I'm perfectly comfortable loaning that out. AVAX, I think it's probably going to go down in price by about 50% in the next 2 or 3 months. So I'm feeling really comfortable in borrowing that and then selling it. But you don't want to over leverage yourself, otherwise you could get liquidated. You notice I've only borrowed out, I could borrow out another $500 right here, but I chose to only borrow out half of my available balance. So in case AVAX doubles in price instead of halving in price, my position won't be liquidated right away. So I've got a little bit of safety net right there. So that way I'm still exposed to crypto markets. I'm still earning interest on the money that I have deposited in my DeFi balances. And I can move back into AVAX immediately, really easily, whenever I see an opportunity to do so. But I'm also protecting myself from the downside crash that is going to be happening in the next 2 to 3 months. So going back to the Phantom Network, you can see I sold most of my FTM and put it into USDC and then deposited it into Geist Finance, which is a borrowing and lending platform. The interest rate that I'm earning is pretty pitiful. It's 1.65%, but I guess it's better than zero. And I get a little bit of a Geist tokens as incentive to be loaning out my money. So for Phantom, I didn't go so far as to short FTM. I might end up doing that. I'll think about it. I just don't want to get liquidated in case I'm wrong and in case like crypto ends up skyrocketing in the next like 2 or 3 months. So for the Solana network, most of my money is actually in NFTs already. And I'm not planning on selling any of my NFTs. I have about like 56 SOL in NFTs right now. So my thoughts for NFT prices are that NFTs are going to outperform their base token that they're denominated in, but they're going to underperform the US dollar. I think their absolute value in terms of US dollars will go down over the next 2 or 3 months, but the SOL prices will go up. I really like my NFT collection, and like the prices will come back anyway, even if they go down. I'm perfectly happy bag holding. Another obvious thing weighing down the crypto markets is the Federal Reserve ending its bond purchasing in March, and then going to be doing 3 to 4 rate hikes this year, followed by 3 to 4 for the next 2 years. So interest rates are going to be going up. Like, thank God. Finally, the Federal Reserve is like taking initiative and doing something, because the US dollar has been losing value very rapidly. This past year, the US dollar had about 10% inflation. Prices are just skyrocketing for a lot of assets, and a lot of just regular consumer goods like food and gas have been going up around 10% for the past year. So it's good the Federal Reserve is finally taking inflation seriously and is going to try to get out ahead of the inflation that they caused. Because for the past year, the Federal Reserve has basically been like,
inflation? What inflation? I don't see any inflation, guys. What are you talking about? There's no inflation here. What are you talking about? Oh, me? You think I caused inflation? No. It was supply chain. It was supply chain. Shock and demand and stuff. No, not me. Money printing? No, that's not me. No,
somebody else. But yeah, anyway, long term, these rate hikes are going to be negative for the crypto markets and for the stock markets in general, but they're a good thing for the economy in general. And I'm still bullish on crypto long term. Like, if you go back to 2018, after tax day ended, we had a huge rally. And then after that, Ethereum just got ground into dust for the next few years. And went into a very long winter for the next few years, which I don't think is going to happen again this time, because there's just too many businesses and too many projects in the crypto space right now, just coming up with really cool, innovative projects. I think crypto is going to be taking off later this year. So what are some of my favorite crypto holdings that I think I should be buying? So it's been pretty clear in the past year, 2021, that the winners in the crypto market really are Solana, first of all, then Terra second of all, and then Avalanche third. And I think it's pretty interesting to see those three emerge as the clear winners in the crypto space. So check out DeFi Llama. If you go back to the beginning of the year, you'll see that Ethereum owned 97% of the DeFi market. Fast forward a year later, and you'll see that Ethereum's dominance dropped to about 62%, with Solana, Avalanche, and Terra being the top networks absorbing most of Ethereum's market share. So I think when I do buy back into the crypto markets, Solana, Terra, and Avalanche will be the three to buy into. So it's pretty interesting to see these three blockchains that are the champions of their own like little ecosystems. Like Solana, they invented their own like proof of history thing, and they're their own thing. And then there's Terra, which is based on the Cosmos SDK. So I was buying a good amount of Atom down here. Cosmos SDK, it's its own like network of blockchains, and Terra is the most successful one in that network. And then you have Avalanche, which is an EVM chain. So a lot of networks, what they did is they cloned the Ethereum virtual machine so that any Solidity smart contract that runs on Ethereum, you can just copy and paste the code, run it on their network with a lot cheaper gas fees and at a lot faster rate. You've seen a lot of Ethereum sidechains emerge, like Avalanche, for example, or Polygon Matic, or way down here is Phantom, for example. Phantom, for example, is another one. So Ethereum is still benefiting from its first market mover advantage. So Ethereum invented the whole Ethereum virtual machine, and they invented DeFi and everything. And they had a clear lead in that, but due to all of the high gas fees, they've been increasingly losing market share to their smaller competitors, and they're going to keep losing more and more market share until Vitalik Buterin's team can get their shit together and launch the Ethereum 2.0 version, in which case maybe they might stand a chance. But I've seen an alarming number of projects porting over from Ethereum to other Ethereum virtual machine chains, which is very easy for them to do. It's very easy for these projects to jump ship. Very easy for their users to jump ship too, because they don't even have to install anything new. They just go up to their MetaMask. They can just change their network from Ethereum to Moonriver or Celo or Phantom or Avalanche or any of these other chains. Like for example, the Sandbox game is looking to port all its NFTs over from Ethereum mainnet over to Polygon. So my concerns with Solana is that they don't really have a gas marketplace like Ethereum has that is used to allocate transactions. So what's happened on the Solana network is that it has a huge potential transactions per second limit, but it's been slowing down a lot, and it's been running at a fraction of that huge potential, which is being used up by a lot of spam bots, which are trying to mint NFTs really fast, for example. Additionally, Solana did go down for almost a whole day, like a few months ago, which is pretty concerning actually, because if you have millions or billions of dollars even locked into the Solana network, you don't want Solana slowing down or going down entirely so that you can't access any of that money at all. That's pretty concerning, but Anatoly's team is pretty confident. They know that these are problems, and they're already working on some pretty robust fixes to make the Solana network more robust, be able to withstand spam bots. My concerns with Terra is its stablecoins. So if you look at Terra's stablecoin, UST, you can see it's only been around for a year, but there's been some pretty significant periods where it was pretty far off of its peg, and these are pretty significant moves from its peg. Like, it's off its peg by like 4 or 5% or more, and then it stays off of that for like a day or two. I don't think that UST is a super reliable stablecoin. And if you guys are holding UST, I would be cautious about that, because I think it's a very real possibility that UST could lose its peg and could crash down maybe to almost zero, worst case scenario. So I'm not holding any UST right now. Now for my feelings on other cryptocurrencies more generally. Bitcoin, yeah, it's cute. It's the first mover advantage. Yeah, it's got a huge brand recognition, but Bitcoin is honestly pretty useless. I don't honestly know why anybody buys Bitcoin. So for like Bitcoin, Shiba Inu, Dogecoin, Litecoin, I call these bag holder coins, because all you can really do with them is you just buy them and then hold them and then hope someday you can sell them to somebody else for more, so you're just like hoping that there's someone dumber than you that you can sell this coin to. What am I going to do with Bitcoin otherwise? Like, I could withdraw it to my wallet and send it to you, and maybe you'll have it in 10 minutes, or if you want to wait for 6 block confirmations, you'll have it in an hour. I can already do that in like 100 different ways. So it's not a very useful token to hold. There's so much hype about it already. There's really no way for Bitcoin to go up anymore. Like, it already had $1 trillion market cap, right? Like $1 trillion freaking market cap. Keep in mind that the most valuable company in the world, which is Apple, is only valued at $3 trillion. And you've already got all the major bag holders in Bitcoin, right? Like you've got Tesla and Twitter holding Bitcoin. You've got Bitcoin ETFs. You've got governments like Miami or Ecuador buying Bitcoin. Bitcoin is just running out of bag holders, right? Like there's no bag holders left to sell Bitcoin to on the planet anymore. And since when did anyone think that Ecuador or Miami governments were making great financial decisions? Like, I don't know. Like, I mean, Bitcoin, it's had its day. It's had a good run, but there's no real future for Bitcoin. Now, for my thoughts on Ethereum, on the other hand, Ethereum has a great product. They have a great network. They have great brand recognition. They have a great first mover advantage. They have a lot of activity. They invented DeFi, but they've really been behind the curve. The fees are way too high, the transactions are way too slow, and everyone is just moving away from Ethereum. Now, when ETH 2.0 launches, I think that a lot of people are going to be really disappointed because Ethereum 2.0 is not going to be any better than Avalanche is like right now, today, not 6 months from now, but today. The Ethereum team has really been dragging their feet, taking a really long time to launch this whole beacon chain and sharding and everything. And to be fair to them, what they're trying to do is fundamentally extremely difficult. And if they screw it up, a lot of people are going to lose like billions of dollars. So they're being really cautious, as they should be. But at the same time, Ethereum is not nearly as interesting to me as a lot of these other chains are. So for BNB, which is Binance's coin on the Binance Smart Chain, I would not trust Binance. I would not trust Binance as the centralized exchange. I would not trust Binance Smart Chain in any way. Binance Smart Chain is not even really a blockchain. They only have 21 validators. At that point, they're not even at that point, they're not even a blockchain. There's no decentralization. They're essentially just a database where everyone is storing their money and then hoping that Binance, the corporation, which is not even a U.S. corporation, is not going to rug pull them and steal billions of dollars. I would not trust BNB at all. I don't own any BNB. I'm not going to touch it. For Cardano and Polkadot, those are both of the Ethereum killers. But I have a lot of money locked in Polkadot for the crowd loans, for example. And I have a lot of money locked in its sister network, Kusama. You can't unlock that because those are all stuck in crowd loans for the next year or two. As interesting as both Cardano, Polkadot, and Kusama are, I don't see a lot of future in those ecosystems. Like, I just don't see them really going anywhere. And I probably won't put any more money into those. Avalanche, I don't have any concerns about Avalanche right now. Polygon and Matic. Polygon seems to have a pretty bright future. It's looking like the chain of choice for a lot of projects that are looking to escape Ethereum. For Ripple, I don't really know much about Ripple. I'm not really interested in it. So for Dogecoin, the only reason anyone bought it was because Elon Musk was hyping it on Twitter and they thought it sounded funny and sounded cute, but there's no real future in Dogecoin. Dogecoin has nothing interesting going on in it. Shiba Inu, it's just a generic Ethereum token created by idiots to steal money from children, essentially. So anybody could create a Shiba Inu token. There's nothing interesting or unique about it. Now, Algorand could potentially have some future. I'll have to look into its ecosystem like a little more. So Cosmos, the Atom token, that's the main hub for the Cosmos SDK ecosystem, the Cosmos SDK network of blockchains, of which Terra is one part. So that token could potentially be really big. Phantom is one of my other favorite EVM, Ethereum virtual machine chains. But they're just not decentralized enough for me. They only have 61 validators right now, and whereas Avalanche and Solana both have over 1,000. So before I can really recommend anybody put serious money into a network, it's got to be really decentralized. It's got to be a lot more decentralized. So Phantom has a lot more work to do to justify its market share. So that's my thoughts on the crypto market moving forward. So for anyone who's watching this and they've already lost a significant amount of money, or they owe a significant amount of money in taxes, I just want to say that taxes are simply not fair. So to see how unfair the US tax code is, let's take an example where you work for me and instead of me paying you in US dollars, I pay you in Bitcoin. So I give you one Bitcoin, which is worth $60,000 at the time of you receiving it. So when that happens, you owe $20,000 in taxes because the Bitcoin at the time of being received was worth 60, so you owe a third of that, which is 20,000. Now, suppose instead of selling your Bitcoin, you hold on to it for a few months and the price of Bitcoin drops from 60,000 down to 10,000. Okay. Now, even if you sell all the Bitcoin you owe, you're not going to be able to meet that tax obligation, which makes no sense at all. And this actually happened to a lot of people back in 2018. What happened is that they were buying and selling Bitcoin and Ethereum, and then they made a ton of money. But then when tax time came, the price of Ethereum and Bitcoin crashed, and they didn't have enough money to even pay the taxes that they owed on their gains. And so they had to do what was called an offer in compromise, which is basically where you negotiate with the IRS and be like, hey, I know supposedly I owe this much money, but I can't really pay that much money because I don't have it. And so then you have to negotiate with the IRS to get your tax bill down. I don't want to see any of you guys get stuck in that situation where you owe the IRS more money than you actually have in your entire bank account, which can legitimately happen. Now, if the tax code had been written with fairness in mind, what would have happened is that you would only be taxed on that Bitcoin when you sell it, or maybe exchange it to somebody else in exchange for like a good or a service, for example. So going back to our situation with that tax code, I would have given you one Bitcoin worth $60,000, price falls to $10,000, then you sell it, and then the IRS takes $3,000 out of the $10,000, because that's realistically all the money you really got out of that. But that's not how the tax code works right now. Right now, what would happen is that you would owe $20,000, you would have $10,000, and then you would have a $50,000 capital loss, but you'd only be able to take $3,000 out of that $50,000 per year to offset your income. When I think about the US tax code, when I do research about the US tax code, I feel like the tax code was written as if we're cows and the government is just trying to milk us for as much money as they can possibly get out of us. The US tax code was not written with fairness to you or with your ability to grow your own personal wealth in mind. Let me give you a second example of how the US tax code keeps us all impoverished and prevents us from growing our own personal wealth. Let's suppose you have $1,000 worth of Ethereum. Now, Ethereum's price doubles to $2,000, and you exchange your Ethereum for $2,000 worth of Solana. And then then the price of Solana doubles, and now you exchange your $4,000 worth of Solana for an NFT. What would be fair is for you to only be taxed once you sell that NFT and take your $4,000 or however much money you have at the time when you sell it, and then put it back in your bank account and use it to buy like food and other things like that. They could be like, okay, you turned $1,000 into $4,000. Now you owe money on that $3,000 gain. That would be fair. But the way the IRS works is that when I take that $1,000 and it doubles in Ethereum, and then I exchange it for Solana, that's a taxable event. They'll be like, oh, you made $1,000. You owe us $300 right there. And then Solana doubles from $2,000 to $4,000. And they'll be like, oh, you made another $2,000 there. Well, you owe us another $600 something. And the whole way, when you're doing all these exchanges, you're just generating more taxable gains. So as you make each one of those exchanges, you're creating taxable gains. You're doing a taxable event. And the IRS is basically bleeding you dry the whole way along your whole trading career. They're bleeding you every step of the way. Instead of waiting for you to accumulate as much money as you can and then taxing you when you sell when you sell those assets and use it to buy consumer goods again, which would be fair. So the IRS calls these tax-deferred like-kind exchanges, and they used to be available in cryptocurrencies prior to 2018, but then Trump amended the tax code to basically kill that loophole. So now every time you exchange one cryptocurrency for another, you have a potentially taxable event instead of those taxes being deferred. And what's interesting is that these like-kind exchanges, they're not available for cryptocurrencies, but they are available for real estate. So if I bought a house for $200,000, it doubled in value. I had $400,000, then I sold it, used that money to buy another different house for $400,000, then that doubled in price to $800,000, sold that to buy another house. I would not be taxed along the way. I'd only be taxed at the end, not each step of the way. For cryptocurrency, it's the complete opposite. You get taxed each step of the way just because, again, we're all cattle and the US federal government is milking us for as much money as they can get out of us for the duration of our lives. Now, eventually, maybe we can abolish Congress, re-implement democracy, and decentralize, break up the federal government. But we're a long way from having a fair form of governance in this country. So for now, we've all just got to deal with it and be bled on a regular basis to feed a bankrupt U.S. federal government, simply because the U.S. federal government's bankrupt and the legislatures running this country just can't get their shit together. Long term, I'm optimistic that the United States can get its shit together, but we're going to have a pretty big change in governance and leadership before that can really happen. Anyway, so for those of you who have already lost a lot of money in the crypto markets, tech stocks are not doing much better, to be honest, right now. Let's make you guys feel a little better. Let me just show you the wall of shame of tech stocks, all of which All of these stocks I'm about to show you, I have invested in at some point in the past year. Let me just show you what a shit show it is over in the tech stock sector. All right, we got Snapchat down 36%, PayPal down 40%, Twitter down 43%, Zillow down 52%, DocuSign down 54%, Robinhood down 56%, Zoom down 54%, Chegg down 65%, Peloton down 71%, Wish down 76%. And keep in mind, these aren't penny stocks. These are multi-billion-dollar market cap, household brand name recognition stocks. So if you've lost a lot of money already in this market, believe me, you're not the only one. All right, guys, thanks for watching. I hope this video was super helpful. And also keep in mind that I could have no freaking idea what I'm talking about. And the crypto market could rocket to all-time new highs in the next like 2 or 3 months. I just really doubt it, but you never know. I could be completely wrong. If you think I'm wrong, leave a comment down below. Tell me why you think I'm wrong. I guess we're going to find out in 2 or 3 months if I was right or not. Share this video with anybody you think who could find it useful or entertaining. And thank you guys for watching. I will see you guys in the next video that I make. Bye.